Hey guys, we're back. So we've been traveling. We've been all over the places. Many of you know it's been great. Fantastic time with just a ton of friends around the country, ton of boot camp guys. So it's been visit, visit, visit. It's been really terrific. Saw Fisher and Nikki Verle and all those guys down in Nashville. Had a blast with everybody. Saw Palavota and that whole bunch up in Ohio, and it's just great to stay connected with everybody and great for everybody to stay friends and to stay focused. So with that said, we've had some kind of morning today, huh? So going into last night, we already had the Amazon stuff going on. We had just sort of disappointments on the earnings fronts. Apple, wasn't exactly what people were looking for. Amazon, definitely not what people were looking for. And then this morning we had the jobs print that was really, not what everybody expected. I kind of think the reaction was an overreaction. Is there going to be a recession based on 0.1% higher unemployment than was expected? Bureau of Labor Statistics, I call them the Bureau of Economic Falsehoods a lot of times. I don't really think they're necessarily giving us the exact picture of what's going on, as is evidenced by the constant revisions. So just bear that in mind, and let's take a look at the market for what it is. Been looking for a reason to sell off. Things have been way up on their tippy toes, and when that happens, there's generally a lot of room for people who are looking for some profit taking. So first we thought it was just going to be sector rotation. Today the whole heat map is just blood red. So looks like everything's down and everything's going to stay down for the rest of the session, and that brings us then to our strategy, what we think we are going to do. So here it is. Here is the board, right? We're looking at this big gap down open on the triple Qs this morning has set up a trading range that is down below S1. So the reason I think that it's got room for additional downside or room to stay on the downside is that as long as we don't gap down and get into the S2 region, which is way down below here somewhere, there's a low likelihood that we're really oversold. If you look at the daily and the weekly charts, right, these guys are up here. The longer time frame, the red is the weekly, and the green chart here is the daily. We got down underneath into support. So if you're looking at the daily chart, right, we got room probably down into here. On a weekly chart, yeah, same thing. It's sort of sitting on support right now. Just tells you, we're probably going to have that kind of a session. Going to have a session that closes out down in this range. So I'm going to look at shorting from, I was doing this on the SPY, actually on the ES. I was shorting the moves up to 532.92, and here on the triple Qs, 450.21 is a level that I'm looking at then to the NQ. Let me take a look at what's going on with the Magnificent Seven. I know a bunch of you guys are trading that stuff. Just pull that up real quick. And, what we have here is, sort of the same stuff. So Apple, we were talking about this in the war room a little bit ago. Apple is strong today. So, relatively speaking, the relative strength of, or the tone of the earnings announcement, even let's say, was not as negative as the other things that are going on. So this AI, well, not even an AI miss, just sort of not what people wanted to hear about their AI strategy. That sent the stock a little bit on a tailspin after the earnings. You guys know Bibbs, and he trades those earnings announcements with a lot of consistency, a lot of reliability. He goes in just before the closing bell, buys Apple, waits for the earnings announcement, and then usually sells into it and pulls anywhere from $5 to $20 out of it. And on this one, he was saying, well, $2 was all she wrote. And that's because people just didn't hear what they want to hear. They want to hear that, you're going to be on that new frontier. You're going to be part of the picture going forward. And, Amazon, of course, not at all what people wanted to hear. So Amazon, I'm looking on the short side. Apple, I'm looking on the long side. So Apple is 222.37 is really the area that I'm focused on mostly. What I want to see is it come down through that 222.88 pivot line, the blue pivot, and then make its way. So if you're looking here, right, you want to get down below that line and then reverse higher. And on any reversal from, that does this kind of a thing, bounces and comes back up through, I'm going to look at the long side of the market. Amazon, This one I'm only interested in the shorts, and realistically, it's if you look at it here, this is a new sort of threshold level. We've got confluence with the volume by price data over there. Everything is just kind of boxed up in this range that it's been in. So I'm going to look at the short side of the market, but I'm not super interested in what it's doing right this second because there's only about 40 cents worth of wiggle room there. Google, I really haven't found a strategy to get into today. And Meta, if you're looking at Meta, we just made these highs up here, 492.67. So I think if it tracks higher into 492.67 again, I will take it on the short side. I'm going to stop really focusing on this 490.56 as an entry and look at it more as a target. And same story on Microsoft, right? Microsoft's got a nice flat high in place for the day, so it came down, traded lower, and then right around 408, we've got a really solid level of overhead resistance to work with. And those are the ones that I'm most interested in for the session. And then if we look at the spider, so I've been trading. A bunch of you want to do something besides the NQ. The QQQ NQ thing is a little bit rough for some people in terms of how it moves. But if you look here at the SPY, you can see that 532.92 level has been great. So I've just been picking it up there on a scalp and running it as a little bit of a program trade, not even handling it manually, or not even really focusing on that one as a manual in and out. I've just been setting it up to enter at the threshold level, 532.92 on the ES. So I'm not tying up all that capital. So somebody asked me the last time that we did one of these strategy sessions, which I guess was actually last month, right before we left town, what is the deal with trading the EQ and the NQ via spiders and spiders, diamonds, Qs, all that stuff. And it's because of the amount of capital that you have to tie up. So if you look at the NQ, you look at the EQ, you can get about the equivalent of about an 800 share trade-off without really tying up very much capital. It's only about $2,000 on the ES and maybe $3,000 on the NQ to get the same amount of leverage as you would for at about $500,000 worth of intraday margin, or $450,000 worth of intraday margin on on the QQQ and the spider. So that's the reason for it. And if that makes you uncomfortable, then you just don't do it. But if it makes sense and it fits your game plan, then I think it's a pretty good place to focus. So that's it for today. So I'm back. We are back, and happy to be back. Get back into the groove here, back in our office. Not trading from the remote rig. That's always a little bit challenging, but I can tell you we got a great deal on some curved screens from Amazon. I bought them. They were supposed to be open box. We set them up on the trip and just left them there at my mom's house, actually, where we last stayed, so that we can go visit her more often. She's 92, and she's probably not going to be making her way out to Los Angeles too often. So it's a good way for us to be able to just hunker down and work wherever we go. It's the name of our game, right? You guys know we're traveling a lot. We love getting out there. We love skiing and going to the wine country and doing all these little trips. But we also love working, and we love what we do. So we take our little portable rig with us whenever we can, and it's just great to be doing something that allows us all this freedom. So if you are interested in any of the upcoming trips, it's just show up and meet us. We're going to do not Napa Valley. We're going to do Central Coast wineries not too long from now. I'll give you guys an update on when that is. Of course, we're going to do a bunch of ski trips next winter. We're also going to do a scuba trip, and the big unveiler is going to be that we've got one of our boot camp guys is actually a dive master. I'm pretty close to being a dive master, but I'm not. And Connor is just learning how to dive. But we're going to do a dive trip in November after the next boot camp down in the Florida Keys. So I think that'll be a lot of fun. If you can join us, we'd love to have you. You can also snorkel. You can just stay on the boats. You can do you can stay in the bar if you don't like being on the water, right? But it's going to be a lot of fun. All right, so that's it for today, and I'm glad to be back, and we will see all of you next week right here.